Two high growth stocks are about to explode. Two stocks, not just good investments, but your chance to build serious wealth over the next 10 years. Now, the first stock is, and if you're not already looking at, you are missing one of the biggest structural opportunities of the next decade. Now, this stock operates in one of the most high growth, high demand sector, automotive software sector. And this company is a global leader in automotive softwares, and big auto giants like BMW, Renault, Mercedes and General Motors already depend on this company, and their order books are at record high, and their revenue are growing in double digits, and their margins are expanding, and their balance sheet also clean. The automotive software sector is projected to triple over the next 10 years. Yes, triple. And this stock holds a near monopoly in their specialized niche. So if you believe in the inevitable rise of the EVs and the smart cars, and frankly speaking, who does not at this time, then this first stock is not just an investment. It is your ticket to a wealth compounding journey for the next 10 years. So in this episode, we are going to talk about these two high growth stocks. Now you might be thinking, Sonika, how did you pick these two stocks? See, these are not random selections. After a lot of research and after considering a lot of parameters, I have shortlisted these two companies. And in this episode, once you understand these 5 parameters, you will also be able to analyze high growth stocks like a seasoned professional. So before we get on with the stocks, we will first understand these 5 key parameters which I personally believe are very important if you are thinking of investing in high growth companies for the long term. Our first parameter is industry growth. Imagine trying to row a boat upstream with a stagnant river. So no matter how strong your company is, if the industry itself is not growing, then you are fighting an uphill battle. And after some years, these industries either stagnate or they turn out to be cyclical, offering no real wealth creation in the long term. So the very first question I ask is, does this industry offer sustainable growth potential for the next 10 to 20 years? And if the answer is yes, then I start sorting stocks from that industry. So next we look for market leadership. Now when I'm hunting for high growth companies, I want the companies who are either already undisputed champions or have a clear path of becoming one. Why? Because market leaders naturally capture the largest share in the industry growth. So as the sector grows, they benefit the most. And most importantly, once a company establishes its leadership, chances of it failing are significantly lower, and its ability of sustaining that leadership for 10, 15 or even 20 years is much higher. So for me, long-term sustainability is a crucial filter. Third parameter, moat. And now just being a market leader is not enough. The world is too competitive. So I demand that the company possesses a sustainable moat, because without a moat, any competitor can come in with aggressive pricing, stronger branding or disruptive innovation, and that leadership can vanish overnight. So my third filter is crucial. The company must possess a moat, a strong, unique, unbreachable competitive advantage that others cannot easily replicate. Parameter number 4, fundamentals. A company should be fundamentally strong. What do I mean by that? Here we are talking about low or manageable debt levels, robust and consistent cash flows, steady growth in the revenue and profit margins, and healthy cash reserves. And if a company does not tick these fundamental boxes, then it is like building a skyscraper on sand. It will not be able to survive the storms in the market. So in short, we need a company with strong numbers. Now finally, the fifth and perhaps the most crucial parameter for me is the management. Think of the company like a ship, and the management is the captain and the crew. They need to have trustworthiness, they need to have a history of delivering on their promises, and absolutely no red flags, or else today or tomorrow they will sink the ship. And to assess this even in a more better way, I create a detailed management integrity scorecard, because even the best of the industry and the strongest of the moat with the solid fundamentals can be ruined with a poor leadership. So these were the 5 key parameters which I personally believe are non-negotiable when it comes to picking high growth stocks for 10 to 20 years. So keeping all of these in mind, I have shortlisted 2 companies which I am about to discuss with you now. So all right, let us start with our first stock, KPIT Tech, and put it through the ultimate test, and let's see how this stock stands against our 5 parameters. Parameter number 1, is KPIT Tech in a high growth industry? Now the data screams that yes, it is in fact in one of the fastest growing sectors. Now the global automotive software market is projected to grow at a staggering 32.3 billion US dollars by 2030, growing at over 9% annually. But here in India, that is a jaw-dropping 20% annual growth rate, aiming for nearly $3 billion by 2030. So this is not just growth, it is an explosion driven by EVs and autonomous driving. So KPIT is not just participating, it is at the epicenter of this technological tsunami. So parameter 1, past. Parameter number 2, is KPIT Tech an industry leader? Absolutely. They have been recognized as a leading independent software development and integration partner in the automotive and mobility software sector. And they have carved out a specialized niche, making them a foundational pillar. So, parameter number 2, check. Now, our third parameter, a sustainable moat. So, does KPIT Tech have something that its competitors cannot easily replicate? Yes, their deep, specialized expertise in engineering, research, and development for the automotive software. That is their unbreachable moat. So, this niche focus and long standing relationships with the top OEMs create a significant barrier to entry. So, parameter number 3, solid as a rock. Parameter number 4, fundamentals. A great story needs great numbers, and KPIT's financials are robust. Now, the revenue in just 3 years has grown from 2,432 crore rupees to 4,872 crore rupees, and their profits have more than doubled from 276 crores to 589 crores. And this shows explosive profitable growth, and their balance sheet is also clean, indicating manageable debt levels and strong cash flows. So parameter number 4, solid as a rock again. Finally, the most crucial parameter, management. Now our research indicates that KPIT's management score is a near perfect 9 out of 10 on their management integrity scorecard. Now this company was founded by Ravi Pandit and Kishore Patil in 1990, and they have a proven history of evolving the company, delivering on their promises, and having a clear vision for the future of software defined vehicles. Now their substantial 40% promoter holding also shows that they have significant skin in the game, aligning with the interests of the shareholders. So this is a team that we can trust. So parameter number 5, absolutely double check. So there you have it. KPIT Technologies does not just meet our 5 parameters, it excels at every single one. So this is not just a stock, it is the perfect high growth stock. So the question is no longer whether KPIT Tech will dominate the future of mobility. The question is how much to allocate to KPIT Tech and what can be the accumulation zone. Now, if you ask me, I have personally given KPIT Tech 8% of my entire portfolio, but I have built this position slowly and gradually. And currently 1218 is a good support zone, and here I will accumulate some more quantity of this stock. Now, before we move on to our second stock, I want to take a moment to introduce something new to all of you, something that we are calling unfiltered Sanika, a 20 to 30-second section in every video. Now let me be completely honest with you. These videos, or the goal of this channel, is your growth, and every single video, your knowledge and your portfolio should show some growth. And if these videos are not adding value, then they are absolutely useless. So I am asking you for your feedback, your ideas, or if you have something that you can tell us that how can we be better, then let me know in the comment section. I read each and every single comment. So just let me know. Now, the second stock is not just a hospital chain, it is the largest private healthcare players in North India with a strong premium positioning. Think about the undeniable truth. The healthcare demand in India is only going one way, up. And the rapidly rising income levels only mean that more people can afford quality healthcare. And lifestyle diseases are unfortunately on a rise in India. And our aging population need more medical attention than ever before. So this is not just a cyclical trend, it is a structured, long-term growth story that will define India for decades to come. So India's healthcare demand is set to explode. And this second stock is not just well placed, it is perfectly positioned to capture the massive wave. So missing out is like saying no to one of the safest, most defensive, yet incredibly high growth bets in the Indian stock market. And now let us get back to our second high growth stock, Max Healthcare Institute Limited. And this is not just a hospital chain, it is a critical lifeline for our rapidly evolving nation. And now let us put this stock through our 5 parameter rigorous test. Let's go. Parameter number 1, industry growth. So is healthcare in India a growth sector? Yes, the healthcare sector in India is growing at a rapid rate from $110 billion in FY16 to an estimated $372 billion in FY 2023. And that is 17.5% CAGR. And the hospital market alone was $98.98 billion in 2023 and is projected to grow by $193.59 billion by 2032. And that is growing at 8% CAGR. So this is not just a trend, it is a structural long-term growth story fueled by rapidly increasing income, an aging population, and increasing health awareness. And Max Healthcare is riding this unstoppable wave. So parameter number 1, absolutely crushing it. Parameter number 2, market leadership. So does Max Healthcare dominate its space? Yes, that also in a very crucial region. Now they are the largest private healthcare players in North India with approximately 85% of over 5,000 beds concentrated in metro and tier 1 cities. So parameter number 2, a clear leader. Our third parameter is a sustainable moat. So what protects Max Healthcare from its competitors? Now their moat is multi-layered. First is their premium positioning and focus on tertiary and quaternary care across 30 plus medical specialties, including complex procedures like organ transplantation. And second, their extensive network of 22 facilities and over 5,000 beds provides unmatched scale, especially in North India. And third, their Max at Home and Max Labs divisions extend their reach beyond the hospital walls, creating an integrated ecosystem that competitors struggle to replicate. So parameter number 3, tick. Parameter number 4, fundamentals. Does Max Healthcare Institute have the financial strength to support its growth? Now let us have a look at their P&L. Their revenue has grown from 3,937 crores to 7,028 crores, and their profits have jumped from 605 crores to 1,076 crores. And that is phenomenal growth, demonstrating strong operational efficiency and profitability. And their balance sheet is robust and supporting their continued expansion. So Max Healthcare's balance sheet is a prime example of financial health. So parameter number 4, rock solid. Parameter number 5, management. Now, Max Healthcare is promoted and led by Abhay Soy as the chairman and managing director, who has been instrumental in shaping the organization's strategic direction and growth. And his leadership has driven the company to its current market leading position and has achieved a premium valuation. And now let us have a look at the management integrity score table. So the company's consistent growth and strong market position under his guidance speaks volumes about the management's vision and their execution capabilities. So parameter number 5, in highly capable hands. So there you have it. Max Healthcare Institute does not just meet our 5 parameters. It has passed with great numbers. Now Max Healthcare is available at 15% discount, and currently it has broken an important support of 1162 rupees. But here I am not adding positions in a rush. 1010 is a good support, and if the stock comes near this zone, then I will start building positions. And do not forget to read the detailed research report of both of these stocks in the description below. So if you found value in this analysis and if your knowledge portfolio grew even by a little bit today, then subscribe to Rangavan Finance and ring the notification bell so that you never miss out on future insights that could genuinely impact your financial journey. And as always, your feedback, your comments, your ideas, they matter. Put them in the comment section. I will read each and every one of them. And as always, this was Sanika from Rangavan Finance, and I will see you very soon in the next one. Till then, bye bye.